The automobile sector is currently going through a period of significant change. As customer preferences evolve toward more environmentally friendly modes of transportation, businesses are investing billions of dollars in innovative technology such as electric vehicles, autonomous driving, and mobility services. This upheaval generates both risks and possibilities for investors to capitalize on. When considering which automakers are the best equipped for the future, there are a few automakers whose stock prices jump out as potentially profitable long-term bets. This video will provide a deeper look into why each firm deserves a spot on investors' watch lists. Today's video is all about the best car stocks. Tesla Motors. It should come as no surprise that Tesla dominates the majority of rankings of the best stocks in the automobile industry to hold. Tesla, which was the first company of its kind, has established itself as the market leader in the electric vehicle business and is projected to account for more than 80% of global EV sales in the year 2020. The previous year was a record for Tesla in terms of the number of vehicles it delivered, which was 930,000, and the company also made tremendous headway in growing its production capacity by opening new facilities in Austin and Berlin. It would appear that Tesla is in the best position to gain from the current momentum in electric vehicles, thanks to the company's early mover advantage and its well-known brand. Despite this, Tesla has faced a number of difficulties as a result of its tremendous success. As the level of competition increases, it is unclear if the company will be able to keep up its staggeringly rapid rate of expansion. Established automakers are speeding up their own plans to develop electric vehicles, which has the potential to reduce Tesla's margins over time. In addition to this, the stock trades at extremely high multiples, which leaves very little room for error. Despite the fact that Tesla may continue to lead the way in terms of innovation, investors may expect more patience from them given the dangers associated with paying a premium today. NIO. NIO is a premium Chinese electric automaker, and as such, it provides access to China's big EV market without requiring investors to place a direct wager on Tesla's already enormous market value. The fact that NIO was able to deliver over 10,000 vehicles in the fourth quarter of 2021 demonstrates the company's capacity to ramp up production. Personalizable features, a technology that allows for faster battery charging, and an emphasis on generating revenue from software and services, in addition to hardware sales, are some of the ways in which the company sets itself apart from competitors. NIO also has the support of the Chinese government, which is a significant benefit as the company attempts to broaden its scope. However, dangers still exist. The company continues to report losses and is up against severe competition from both domestic and international heavyweights that are vying for market dominance. NIO stock has also skyrocketed, and investors need to have faith that the company's operations can continue to support the present price point. NIO is an option that should be considered by long-term investors who are confident in China's position as the leader in electric vehicles. Given the volatility, however, individuals who are anticipating gains in the short term may wish to continue with caution. General Motors. GM is one of the largest traditional manufacturers that is still in business, and with an investment of $35 billion into electric car technology and autonomous driving technologies over the next 5 years, the company is solidly aligning its aims with the shift that the industry is going through. Key recent developments include increasing the capacity of batteries, introducing new crossover electric vehicles like the Chevrolet Equinox EV, and retiring combustion engine passenger automobiles in North America by the year 2035. GM is also renovating factories throughout the world in order to speed up the transition to electric vehicles. Even though there is still a long way to go, General Motors has a good footing compared to some of the more recent EV companies because of its huge scale, existing sales channels, engineering experience, and brand portfolio, which includes Chevrolet, Cadillac, and GMC. The brand may be able to shed its reputation as a manufacturer of gas guzzlers with the assistance of successful launches of electric vehicles such as the GMC Hummer EV and the Cadillac Lyriq. If management is successful in meeting major transformation milestones, patient investors may find the valuation of GM stock, which is still reasonable, to be enticing. The Ford, similar to its competitor General Motors, faces a significant challenge as it endeavors to transition its well-established truck and SUV brand away from gasoline-powered vehicles. This transition is an intricate process, but Ford's sizable investment of $50 billion into electric vehicles by 2026 and its ambitious goal of having 40 to 50% of its global car volume consist of battery electric vehicles by 2030 signal a notable commitment to this transformation. The recent successful launch of the all-electric F-150 Lightning model augurs well for Ford's aspirations to penetrate the heart of the immensely popular vehicle segment in the United States. Additionally, Ford is gearing up to introduce other electric vehicles, including a commercial van named the E-Transit. One of Ford's strengths lies in its extensive history and global manufacturing presence. These factors provide the company with a strong foundation as it navigates the complexities of transitioning to electric vehicles. However, the shift comes with challenges, including the potential for the costs of electric overhauls to outweigh the savings. Despite this, Ford's strategic focus on producing pickups and SUVs aligns with the rising demand from consumers, enhancing the brand's competitive positioning. Amid the ongoing movement towards electric vehicles, the progress made in developing essential trucks and crossovers could play a pivotal role in driving Ford's stock to higher levels. Just as its rival GM undergoes a transformation, Ford's strategic choices will significantly influence its trajectory. Both companies, deeply ingrained in the American automotive tradition, face similar challenges as they adapt to the evolving industry landscape. Ford's commitment to embracing electric vehicles, as demonstrated by its substantial investment and innovative product launches, indicates its dedication to remaining relevant in a changing market. Keeping a vigilant watch on how Ford manages this transition, particularly regarding must-win trucks and crossovers, will be crucial in gauging the potential future success of the company and its stock. Rivian. After it makes its public debut in the latter half of 2021, the Amazon-backed electric vehicle startup Rivian, which is one of the most well-funded EV startups, will face enormous expectations. Both the R1T electric pickup and the R1S SUV have garnered plaudits for their ability to combine utility and performance in a way that is unsurpassed by previous generations of trucks. Rivian should have the means to develop new models given that the company reportedly has $10.5 billion in cash on hand. Yet, ramping up production remains problematic, as demonstrated by recent decreases to its 2022 aim. Even while Rivian might make meaningful strides in the future, investors today are paying a premium for promises rather than validated sales. In addition, impending increases in interest rates have a greater impact on heavily funded startups than they do on established automakers. Those who have faith in Rivian's ability to execute its aspirations may be rewarded. But there is a long way to go, and a great deal of uncertainty still exists at this time. It is more prudent to exercise patience and let the company demonstrate its worth rather than chase the frenzy of the previous year. Lucid Group. Lucid is another electric vehicle startup that has received significant funding similar to Rivian. However, the Lucid Air sedan has an emphasis on luxury. Positive feedback on the Lucid Air Dream Edition lends credence to the claims made by the company regarding its technological capabilities in areas such as battery range. To this point, the Saudi Arabian government's support has been important in helping to fund activities. However, Lucid has not yet demonstrated that it can scale while keeping quality consistent in the face of growing demand. Any problems with the production or quality could shake customers' confidence. The stock also continues to trade at a significant premium to legacy automakers, with the primary focus being on the company's potential rather than its existing operations. Although Lucid has aspirations of directly competing with Tesla, the path ahead is lengthy and fraught with uncertainty. Before considering an investment in any of the electric vehicle startups, it may be prudent to exercise the most patience with Lucid. Established businesses as well as new upstarts are competing with one another in order to take the lead in the post-combustion age as the automotive industry shifts to address climate change and changing consumer demands. Investors are able to determine which firms are in the best place to capitalize on shifting market trends by doing an analysis of the various automakers' competitive advantages, long-term goals, and potential threats. Tesla, General Motors, Ford, and possibly NIO and Rivian are leading candidates despite the fact that there are numerous potential future routes. Nevertheless, the change is still in its early phases, and it will require caution and patience to watch how things play out. What do you think of our video? Let me know in the comment section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.